Good afternoon, everyone. This is The Big Picture. I'm Rich Swerbinsky with Onward and Upward Consulting, joined this week, Robbie Chrisman. Robbie, good to see you. Your dad is what? He's like mid-flight or something.
He should be walking off the jet bridge as we speak. So this will only be here for a couple minutes, but
I would love to look at that, honestly. You could stay on because I'm in Ohio here, and it's, I haven't seen my front lawn in like 7 weeks. So I'm enjoying. You're in nCino, California, you mentioned.
Yes, up a couple hours north of San Francisco on the Pacific Coast Highway.
Sounds horrible. Yeah, so sounds great, actually. So this week, very, very pleased to be joined by the Senior Vice President, Mortgage Partnerships and Strategy. That's a cool title. For nCino, it's our friend Jay Arneja. Jay, thank you so much for joining us and looking forward to the conversation today.
Thank you.
Awesome. If you could just tell us a little bit about nCino for those that may not know and your role within the company.
So Jay Arneja, a long tenure in mortgage, about 5 years on the Simple Nexus nCino side. And I did product for a long time, and that's where all my conversations with Robbie used to be on the product side of nCino. And about a year ago, I shifted over to the U.S. mortgage partnership side. I think it was a great transition, do product, and then, look into partnerships, how to scale. It's been a good transition here.
Very cool. That's
and
awesome.
nCino, of course, as everybody knows, formerly Simple Nexus, but point of sale solution, the mortgage platform for U.S. mortgage. Point of sale, you want to process, closing, incentive compensation, and analytics.
Yeah, absolutely. nCino, which has been a LOS for depositories historically, mostly, right?
Yes, on the legacy nCino side, yeah.
Yeah, and then acquired Simple Nexus a few years ago. I mean, what a great company, Simple Nexus. I had to look. We partner with them like in their infancy at TMC some years ago. It was just incredible watching their growth. Oh my God, over about a 10-year period was about as quick as anything I've seen in mortgage. So
yeah, I was following them way before I joined. So I did the thing of poking and asking, can I join? Because I was just so mesmerized by what was being built. And we'll get into that discussion a little bit, but a little bit on like just the mobile native app, everything, and how well it just fits into what we talk about all day, or homeownership.
I was going to say, you're going to have to dust off that legacy system here after Michelle Bowman's speech this week, which I know we'll get into today, Rich. You're excited about that.
You read my mind. Yeah, I got to see it live. I don't think I've ever seen like a speech that was like newsworthy in the mortgage industry live. Maybe I have, but it was pretty cool. I was like, I was at the AB. I didn't even know she was speaking until like the night before. I'm like, oh shit, Michelle Bowman's speaking here. All right, I'm gonna, one less cocktail and make it downstairs at 8:30. And it was really good. I thought she was great. And man, she really, pretty passionately spoke about a need, quite frankly, for return of banks to the mortgage lending game. Talked about, what had kind of led us to this point. Banks did 60% of the volume in 2008, 60% of the mortgage volume. Now, most stats from last year, IMBs are like, somewhere in the low 80s, depending on whose numbers you look at. And why did that happen? Well, banks got regulated out of mortgage lending. It's really simple, right? Like the capital rules that were put in place, insanely penal for banks to hold MSRs and whole loans on the balance sheet. So she spoke of the Fed's current efforts to change two bad parts of those capital rules, which is, the capital you have to hold against mortgage servicing rights. And then finally, like, it makes no sense. Like, currently, a bank that has a 5% LTV loan on the books, they have to reserve just as much capital against it as like a 75% LTV loan. It makes zero sense. And these could be pretty impactful changes for banks. And Robbie, your thoughts on Michelle Bowman's speech this week?
My thoughts are, it used to be that Fannie and Freddie were the innovators in the industry. We might see banks come back and start innovating now that Fannie and Freddie have basically gone into this planned obsolescence. I like it. I like it. More competition. I think it'll help drive the industry forward. And I do think, this capital requirements thing has been going back and forth for a while. It's obviously something that they need to resolve. And I like her throwing her hat in the ring and saying, let's do this.
I love it. Jay, any thoughts on Michelle Bowman's speech this week? And yeah, just banks and mortgage lending.
Hey, I sometimes for a second take off my nCino hat. I take, put on an industry hat, and I'm like, anybody that can do mortgages, right? Home ownership may not be for everybody. Some people do want to rent, but the more people that can come in, and for us, we have a big component for credit unions and banks. We provide tech solutions for them too. So it's good news.
Yeah, and to Robbie's point, it's ultimately good for the consumer, Robbie. I mean, this is great for the consumer. More options, more choice. You think about all the homes we're going to have to build in America. It's tougher for IMBs to do and hold construction loans. Affordability is challenged. Those make sense deals that don't go non-QM, or maybe they could go non-QM, but a bank will give that borrower a better rate. That's the world I grew up in bank mortgage lending.
Yeah.
And I would think too, at the end of the day, the IMBs have their advantages, banks have their advantage. I'm all for more competition, Rich. And if you want to talk about driving down interest rates, it's a big deal for President Trump and millions of Americans. This is a good way to start. It was essential. The capital requirements were essentially discouraging banks from being in the mortgage space. And you saw that. I read it in your Swerbinsky blurbs this week about the change over time of, it used to be 80%, now it's 20%, or flipped like that. And so good by me.
Yeah, it's like, essentially the federal government regulated banks out of the mortgage industry. Now IMBs are doing 84%, and there's no regulatory body. There's none. We have 83% of the mortgage volume. There's really no regulatory oversight. Of course you have states, but if there's something being done at the CFPB to monitor what's going on nationally, I'm unaware of it. But and she spoke to that too. And not only do they, IMBs control so much of the origination volume with little to no regulatory oversight, but the servicing volume, all these big acquisitions that we've seen, Two Harbors, UWM, and Cenlar, and all the rest. There's definite systemic risk. So,
Jake, can we talk about how nCino is prime position for this change if banks start to get back in?
Rich sort of hinted towards that and said, legacy nCino, and then they acquired Simple Nexus. It's the mortgage arm. So it's the mortgage arm to provide mortgages, whether you're doing it at an IMB. IMBs are a very, very big focus for us. But banks and credit unions are as well. There are banks that use the mortgage side of nCino, and credit unions. And we'll get into talking about paperless mortgage, but I have about 3 or 4 credit unions that use the entire platform really well. So we're really well positioned from our GTM strategy and everything to say, hey, if you're a bank, this is sort of what you use from a platform perspective. But if you're an IMB, here's the mortgage platform. It's a mortgage tech in a box. So nCino remains really well positioned to see what happens from this.
Love it. As always, any questions, comments, put them in the chat. We'll address the ones that are appropriate, funny, relevant. So, and Jay, really excited for this conversation. I mean, you've spent your whole career on the mortgage technology space. And, I made a funny, not funny LinkedIn post this morning about just still how behind the times the mortgage industry is relative to other tangential industries. I guess few people better positioned to answer this. Your current view of the current state of mortgage technology as we sit here in 2026.
I think the people that are using it really see the benefits, and the people that just avoid it I'm at the point we've talked before about digitizing digital, but we're in a data transformation phase of the world. So in mortgage, if you don't adopt, I think there is this, first time I'm going to say it, but yeah, there is a possibility of just left behind, truly left behind, because you no longer can say, I won't go digital. Okay, I can do it in paper. If you want to adopt an AI strategy that everybody's talking about, you can't do it through paper. You're doing it through AI. The compute power comes from data. So we are headed into decision making, I think, that people will have to do. From where are we? Still a little behind, but people are caught up in their personal lives with so much usage of AI or any kind of, technology that most people now are like, yeah, I got to use that at my work too.
Mhm.
You all are probably doing it too, and most of our listeners are probably doing it too. If you're sitting at your desk, you're using some sort of tool to make your life work
Nope.
better.
Nope.
Rich, you're not hand drawing those images I see in your emails with like that's not
Listen.
the studio.
There's nobody using AI more than me, like per capita, honestly. But it's been great. I figured it out. Just I'm running a few different businesses. Like like oxygen. Honestly, for what we're doing. I mean, night and day.
Jay, I have thoughts on this because I speak to a lot of people in the tech space every day on my podcast. Why now? When I got into the industry in the mid 2010s, we were talking about the end-to-end digitization of mortgage. Late 2010s, we were talking about remote online notarization, e-close. These things take longer, and so I hate to be cynical here, but it almost seems like wishful thinking to say now is the moment that the train is leaving the station. Now is when you have to do it, especially because I think we've seen people. There's diverging camps. Obviously, my dad would be in the furthest curmudgeon camp, but some people put too much trust in AI, and then later on, they have to go back and revisit some of their strategies and stuff. And so I'm becoming more and more cynical about it as people blindly trust it more and more and think it's this end all be all solution. I actually saw a really good quote in the New Yorker the other day. It said AI is very industrious, but not very intelligent at this point. So if you're using it for industrious use cases, I think it'll be a lot better than having it be intelligent for you.
So I look at it from, when was internet came about? We were like, oh my goodness, what's happening? Nothing happened. Our lives got better. So think about all these years, even last 20 years, what we have been doing is leaning and leading towards where we are today. We walked into this. It took us a long time overall as humans to walk, but we took about 20 years, put all this data to be computable, if you may, and walked into this situation where now the data is saying, yeah, I can have so much compute power that I can do this, this, and this. So why avoid it? I'm more of I think I'm in Rich's camp, is embrace it. We, as AI is improving, getting more intelligent, our prompts are getting better, and we're leaning towards providing more data or validation for AI to get better. So I'm more in the embrace, use it, embrace it, and use it for now. Yes, today we talked about regulation. Is it a time for regulation? Yes, because you could have so much increased problems like fraud come about this because of the use in our mortgage industry. But I think resisting it to say, the skeptical about it, I think we're way past that time. And if you think about, we've had 5 cycles in 5 years, in the last 5 years, tech is moving so fast that I think if there was a point to be cynical, and we could keep discussing this, Robbie, way into later in the year, I think that was before October 2025. I think we passed a certain threshold of what was happening, and then it's just been, it really is a demand. It's an ask for us every day, I think, at nCino. Everybody thinks about how am I going to use it and what my tech provider can do. So, Rich, what I would say is, if anybody listening to this, if you want actionable items, talk to your tech providers. They are already discussing this probably 20 times a day, and they should be able to offer you solutions. All I would say is don't guide your tech provider into what they should do. Take your problems, take your data, and let them walk you through what their AI solutions can do for you to solve your problems.
Interested in both. It's like, the moving target that I can't stand. Changes every time. It's completely changing every 4 years. So that's clearly part of it. But some other thoughts on, I guess, why mortgage tech is behind other tangential industries. Jay, I'll start with you, and then I'll get Robbie's thoughts.
My thought is very simple. We don't mandate we have to keep up with. And we tend to take action when things are mandated. You look at the ERLA changes that came about 5-6 years ago. It was a mandate. So of certain tech, I would say the one that comes to my mind is your conventional loans that are being delivered to the GSEs. As long as a borrower has capability to e-sign, we're not saying we won't give if you can't e-sign. Package paper and send it to deliver. I completely get Texas cash out, housing finance agency loans. Yes, we're not there yet, but your conventional fixed loan, why is it not going paperless? So mandate a few things that have proven themselves.
The thought just popped into my mind of, imagine if AI came about pre-Great Recession, when they were doing, stated income, imagine if AI was out then, what it would have led the industry into, both good and bad in a lot of ways. My mind always goes back to when I was working at SoFi, and apologies if people have heard me say something like this before, we had this grand vision of we're going to revolutionize mortgage. We're going to come in from the side. We're going to change everything. We got $1 billion from SoftBank. We're going to make it great. It's going to be so efficient. We're going to redefine workflows. And then you very quickly realize there's a lot, in addition to the regulation, there's certain expectations of things in the process. There's certain ways that borrowers interact with companies. Tech can be as great as you want, but if you're not designing it for where the borrower actually meets it and interacts with it, or your employees actually meet with it and interact with it, then you're going to have this pie in the sky thing, and it's not going to do much good. So I'd like to think I also thought at some point the industry needed almost like an Elon Musk for electric cars. Someone just come in straight from the side and do something different. But it seems like every time we've tried to do that, it's gotten shot down for various reasons, stakeholder interests or people, regulation, DC. And so I'm less optimistic we will see revolutionary change from this. Now, should it make our lives easier and more productive? Yes. Do I think that it'll redefine the process or even regulators can keep up with AI? No. I'll be the skeptic today. I'll be the cynic.
Yeah, but Robbie, think about when you talk about revolutionizing mortgage, there are components of it, right? Mortgage has so many different components. There are components of it that have been revolutionized so well. We're not seeing paper 1003s anymore. There is a friend of mine, Megan Askin, she's at AFX. I never thought I would see, I come from, running a title company for years. I used to fill in a form, it would go to the abstractor, it would come back 2 weeks later, then I would think about doing the binder. She's like, I give you title report in half a day, in X number of hours. Those things we never saw. E-recording we never saw. We never saw such fast processing. We didn't see the closing side come up. So yes, to your point, if somebody comes in sideways and I'm going to revolutionize the whole thing, it's tough because you do have to look at it as, holistically, what part. There's always the post-closing, servicing, all of that too. But most of it has been, it's who comes to put it together. And I think in mortgage revolutionize maybe who can put it together in a sustainable manner. And that's where I think, yes, there are others, but nCino's done a great job. Okay, saying I can sustain everything. Start to end, originate, close, post-close. I'm not saying, we're having an open discussion, so others are thinking about it too. But if there's somebody else thinking about coming in and doing it, I'm going to put a plug in for Mismo here. And my friend Brian and Amy, it has to, right? If you're thinking coming revolutionize, just please take a look at the standards. You'll understand what the life cycle is, and it'll be a lot easier for that to happen, but it has to be done in a sustainable manner.
Can I ask quickly what you think will ultimately make it come together? Because I look at what Figure's doing with the speed of lending or originating on the blockchain. I look at what Pylon's doing with building some of the rails out there. I see different disparate pieces. What will it take to actually bring it all together?
So in my view, because I have seen some lenders do this and I follow them and there are lenders that have done the 11-day paperless closing. So I'm going to say for a certain borrower type and certain lenders, they know who they are. They have revolutionized that. We do have separate borrower needs depending on what type of loan. You named a few. We were missing banks, possibly credit unions. I think, what happened this week. You're removing the requirements. You're doing so many other things external to that loan manufacturing process that finally says, yeah, it can come together. For borrowers, I don't think of just the next generation, but the generation behind them, right? The young generation who's looking at the adults who buy homes. And I think once those adults that are buying homes are not as overwhelmed with it, that to me will be the point. And everybody's point will be different. I'm like, hey, when a 10 to 13-year-old is looking at the adult in their lives and sees that they're not overwhelmed with this purchase, like they're not about to have a heart attack because they're buying a house and, oh my God, closing was delayed, so I must, worry now. I think that will be the point for me. But you raise a very good point. It could be different for different people. It could be like, hey, it's come together means something to me, but it could mean something different to Rich or to you. But the technology is there. I would have to have somebody challenge me on that and say, there are elements of the technology to do that paperless mortgage are all there.
Quick, Rich, I'm sorry to interject. We've seen companies that are AI native and have built from scratch in the last couple of years. They think they can do it the best process, and they haven't taken over. And so for these companies that are already so far ahead of some of these legacy lenders, why, Jay?
Sustainable. I think the key is sustainable. Like, is your process sustainable? Does it meet certain standards? Does it meet the lenders? Yes, everybody has their secret sauce. Everybody has different workflows, but your origination, processing, closing, post-closing, can it consistently meet that for at scale, lights out processing without anybody monitoring it? That's, I think, where people are looking to get towards. And yes, Simple Nexus have done that, and now nCino. I throw the plug in because I could see it, but no doubt others probably are marching towards that direction as well. But I think that those are some of the key points. And we have looked at standards a lot. We've built to those standards with the assumptions. And maybe part of it is, the way Legacy and nCino operated directly in banks. So I was already used to it. And as Simple Nexus was growing, I was very, very involved with Mismo. So it was definitely hey, let's build to standards.
This is The Big Picture. I'm Rich Swerbinsky with Onward Upward Consulting, joined by Robbie Chrisman, and this week our special guest, SVP of Mortgage Partnerships and Strategy at nCino, Jay Arneja. Jay, I'm glad you brought up Mismo. That's where I was going next. And honestly, I would say, like, in my opinion, some of the best news just for the mortgage industry I've heard in the last 6 months was when Brian View went to Mismo.
Oh, yeah.
Because he's just one of those guys, no matter where he goes and what he does, he's going to knock it out. And we desperately need data standardization. How do we not have this yet? MBA owns Mismo, right? Are they own like a
There is, yes, there is. I do this because I'm a physical and visual person. So yes, there's a connection.
There's something there, right? I don't know exactly what it is, but why to this point, and I'm asking because I don't know the answer. Why have we not had better adoption of Mismo pre-Brian? He's going to get it all figured out. Brian, if you're listening, no pressure.
It's not as glamorous. It's the boring side. If you're not into, being a little bit of an auditor or a little bit of the lawyer in you, and you don't want to read things, and you kind of, because it's so easy to build, I think that's why. But Brian's going to put it together. He's already, if you read some of his works, he's separated, hey, the data dictionaries from the data models, from the standards. There's right people in the right places. And he's making it glamorous. I guess that's the simplest way. And we love glamour. I'm going to say, please, in mortgage, please deny it if I'm not right, but it has to be glamorous. It has to be, a little, increase your pulse. But I have continuously seen companies there's two types of companies, I say. One is they know they're using Mismo, and the other one is they just don't know they're using Mismo, but everybody is. And the ones that are using it just take more advantage of it faster because they understand, like, their programs, it's life of loan. If you show that to every new employee that comes in, they'll understand the entire process, what's gone digital yet, what's automated, what's not. But I think Brian is describing it in the right manner. And that's the first thing that had to happen, is the descriptions had gotten all intermingled of what nCino is. And if you read his works, I think you can understand it better. And then he has Amy. Amy, if you're listening, or if you ever listen, Amy Moses, I worked on some of the stuff with them on ResGov to try to increase adoption. And I think some of the solutions that we've put in, she's going to run with it.
Brian and Amy, if you're listening, for this beautiful plug we just gave you, so.
Brian and Amy are good people, and yeah, I'm really glad that I wouldn't want that job, but I'm glad that they're on it. So
I'm with you, Richard. Yeah. I'm very happy to support.
Yeah. And then how much blame, Jay, do you put on ICE for the lack of tech adoption in the mortgage industry? They've had 70% market share. The platform's built on legacy tech. They haven't exactly, and listen, don't get me wrong. I would be doing the exact same goddamn thing if I was running ICE that they're doing. But I do think one of the net effects of their business success and strategy has contributed largely to, just mortgage tech being not where we thought it would be in 2026. It's a tough question. It wasn't on the question.
It's a loaded.
We kept going off the question sheet. So
in many ways, yes, but I think we're all responsible for it. If I were to say, even on, sometimes when I'm frustrated and I'm not on camera with that whole process, but I think I would have to say we're all responsible for it. The solutions that exist outside of a system of record and an LOS, we're not even willing. If we did all of that and then we looked at, hey, things are slow, you're not innovating as fast, we're also dependent on you, I think it would be easy. But 2 years from now, Rich, if we're having the same conversation and we did everything else.
Although, to be fair, 2 years ago, I would ask people that same question. And they said, if we're still having the same conversation 2 years from now, then you can blame ICE.
2 years from now with me, Robbie knows, I'll be happy to look up left and say, yes, we did everything on our part. I think this December is, a good, their web piece. It's supposed to remove all latency. Everybody's supposed to be on it. And for all the things I do say, if that happens, I think we'll be in a good spot. I like other LOSs too. So I'm going to try to be Switzerland, but I'm just neutrally. Other LOSs have stepped up some. I'm going to say, I could see that in the last, I would say, year or 2 years. Some of them didn't even recognize the existence of a POS. So certain things work really, really well in Encompass, and that's where we are just, indebted. But I'm hoping this year is a big change. Things are coming together. I know I'm an optimist, and Robbie, you hear me. I'm always like, it's coming, it's happening. It's always the good stuff is coming. But think about all the things that are coming together. You mentioned this speech this week, Encompass on web. At least acceptance of, hey, we do have to work on a data focus, like with lenders, like, hey, AI.
MISMO, that's a huge.
MISMO is coming.
There's
just a lot of advancements being made in many, many areas where, for me, it's starting to come together. Listen, it's the person's biggest asset. It's a lot of responsibility to originate and close, carry that paper. It's not as easy as, and some people say why it's similar to buying a car. It's not as easy as buying a car, right? If there is fraud or there's something that goes wrong, the magnitude of, unless you're buying that $500,000 car, a $50,000 car and a $500,000 home or $1 million home, there is a difference in that magnitude. So things do move a little slower. I was one of the biggest complainers, but I think I've realized as I've dug deep in is we are headed in the right direction. I think we need more participation. I completely agree with that. Like, you can't resist the tech. Please, lenders, if you're listening, increase your tech budget, much needed. Sometimes when I say things like that, people will be like, well, this leads to what happens to, the personnel, what happens. And we may have touched on this too. I think people will drop tools way before people. There is so many tools we're using in our everyday lives that we don't need if we let the data transformation AI tools come into place. So
I love the optimism, Jay. You can leave the cynicism to me. And I actually, this is a segue here. I need to leave the conversation to go have a meeting with the powers that be, or the power that is at Penny Mac. But Jay, I really enjoyed this. You know I love you, and I'm looking forward to seeing you in person soon. Rich, thank you for having me.
Good seeing you, Robbie. Enjoy Cali. Yep.
Bye.
Jay, I'm asking you because I don't know the answer to this, and I realize you may not know the answer. How the hell can we not have remote notarization?
Oh,
How is who are the people that are stopping this? A video. How is that not acceptable in 2000? Is with the Notary Association, like, do they have some powerful lobby or?
No, there's a lot of things there. Just since we started planning for this call in the last 2 weeks, there has been a lot of active discussion. So hopefully I will share with you once it resolves, and then you could share with everybody. But Ron has definitely picked up steam. There was, some recent headlines on how many certain people have closed. In nCino, we did about 350 last year, Ron. If you were talking 4 years ago, out of those 350, I would have been involved in quite a few of those. I didn't hear about any because I had one moved, and I've talked to some people there.
That says 300. I was waiting for you to say 350,000.
No, it will get there. I think it will get there.
It's a massive company.
It's the video recording. How do you, what do you do? It's a shift. It's been a shift for people to, move away from, hey, there's components to it. There's a notary component. There's a tech component. It's all starting to come together. And Rich, one of the things is, when we go in mortgage, when we get something, we get tech, we start asking for stuff that we didn't have when we had paper. So that's one of the things. Oh, where's the video recording? Well, you weren't recording people sitting opposite you in a title company, but now we need the video recording. There are reasons, I've been explained that there are reasons we need to have those. So those are being worked through. And what I can say is in the tech we use, the ability to go back and see the ID verification, the validation, the, KBA is really good. So it's something that, because it's wraps up your loan, and it has to be accessed, right? That's the one piece of it. This is the one document that will have to be accessed. Was the lien placed? Was the recording done? And if there is a problem in the loan, this document has to be accessed. It's just going slower. You'll see a lot. There's very good work being done behind the scenes on it.
That's good to hear. There's still what, like 18 states that I know there's still some.
Less than 18. Okay, we're
good.
close to pretty much all states accepting. We're close to all states and counties e-recording as well.
Oh my God.
And this one stat that I've been told is, 95% of our population lives in the 2,500 cities, counties that do e-recording. So we're in good shape.
Sure.
Some of those actually even allow you to paper out an e-recording and record it. If they don't e-record, you sign electronically, they'll do a paper recording. But I'm glad you asked this question, because it is one of the most important components of going paperless. Like, you can't tell a customer everything is paperless, but please drive to a title company at a time that's convenient for them and you. And title companies use Ron a lot. Amy and I have talked before. There are other solutions like iPen, which is in person. Yeah. It allows you for the same thing, but you absolutely need to have somebody. We've had some great Ron stories, Rich. I'll tell you, people that are Doctors Without Borders. We had one customer that was a doctor without border out on site and needed to close. We've had families that close, where grandparents are doing a loan with the kids, and new mom signed 4 a.m., grandparents signed 9 a.m., loan is funded by then. And, so it's all kinds of fun stories with it. But yes, it always seems like there's no work being done behind the scenes on it.
It's a great update. It's very promising. I've stopped following it, quite frankly, because it's, it's been frustrating me, but
it has. Yeah. It frustrated me for a bit too, but you just roll up your sleeves and say, okay, what's the next thing? Let's solve for it. And we're solving for a few of the last components on it, but we continue to close Ron loans for the lenders that need it. They combine it with eNote, they combine it with our hybrid closing, and we do quite a few.
That's awesome. And Derek's point in the chat, still not all the secondary market investors on board, even with eNotes first, let alone Ron. What is, again, I'm struggling. Like, is the hang up just, they're not going to lose business if they don't do it currently? So
yeah, I think that's what it is. But if you saw MERS's recent stat, they were at 15% adoption, which is the highest. And one of the things that behind the scenes, there are discussions that once you get to 15 to 25%, then it's pretty exponential. Same thing. It's, what's the risk? Will I run into, as a lender, I may think the same way, Rich. Will I run into a loan that I close via an eNote, but when I go to sell it, that entity does not accept eNotes? Now, what the reason for theirs is, lack of education. All you do is get an e-vault, and you're going to be able to ingest those eNotes. Servicers sometimes in conversations that we have been nervous. They're like, oh, we had a pool here, and out of 1,700, 100 were eNotes. We didn't know what to do with it. So some education still. If you MERS is, indications are that it's definitely more and more investors are accepting. That was also, I'm going to say 2 years ago, we ran into less investors accepting, but even that's sort of, we're removing all the barriers.
Good. That's some great updates. That's great.
Great. We did on eNotes, on the nCino eVault connected to MERS, we did 40,000 eNotes last year.
That's awesome.
We've just been in the business about a year and a half-ish.
Love it.
So yeah, we're really pushing forward towards that paperless closing, but then also combining it with the upfront solutions we have. Yeah.
And then the credit side of our business, Jay, kind of, it comes up every week. It's just in the forefront right now because of the one score versus 3 scores, Vantage score, all of this, one of the ideas that has come up that I personally like is consumer controlled credit, where, the bureaus become B2C, and you go and you buy essentially a credit score, and it's good for 30 days, and you can use it for your mortgage application. You can use it for your auto application. Any thoughts? It's new talk that's kind of percolating out there. Any thoughts?
To me, I think loans done in that manner, there should be a pilot. We should study it. There's a lot of studies that happen. Close X number of loans in that manner and watch their performance. Does it remain a performing asset, or what happens with that? Is there anything that you can glean in from what occurs there? But before we get to that, I like one of the things, I think you had said it, is all the discussions really highlights is whether we're looking to reduce costs or mitigate risk, right? There's sides of that. And what I'm enjoying most till we get to borrower, all of that, is just the recognition that the needs of consumers that have X score could be different than have a different score. And can lenders get to a point where, hey, X number of my borrowers that have this type of score, my processing units, underwriting units don't need to touch them as much. So is that a way of reducing costs eventually, because I'm going to have less touch on that? But I'm sitting in that little moment of, wow, finally there is recognition that there are different credit sections that we have, and people go up and down in those depending on how life happens to them. But once we have that recognition, and I think a pilot for what you just mentioned would be great. At the end of the day, everybody needs to know whether that will remain a performing asset.
Yeah, for sure. Absolutely. That's the big thing. And that's what I've been kind of saying. Like, I mean, if the market's not going to pay the same price for Vantage score pools or 1 score pools as they will for 3 score pools currently, then it doesn't even matter, right? Because the couple $100 or $150 a file you'll save will be usurped quickly by the faceless, nameless, heartless capital markets. So
yeah, you can't plunge into that. That's a solution where I would definitely support, but I support, run some pilots and observe them. But I will say, I think it's time we do that. I think it's time we run some of those pilots, because if you keep pushing that can down the road, then you're getting to the point of you're never going to have your answer. That's what we all want, is we want data to show what actually can happen. There's definitely very intelligent people involved in these discussions that know a lot more than me, but I'm definitely in the camp of, can we please start something, and hey, maybe even Mismo can help us start it. That just came to my mind, is can we spearhead something with a certain standard of how we can run that pilot? Brian and Amy are going to hate me after end of this year because I feel like they could solve all the problems. But that would be a good thing, do it based on a standard. This is a need of the industry, and let's see if we can come to a pilot. But there's all kinds of things to solve for that.
Yeah. Another issue plaguing just housing, just the housing stock in America. We just need to build more affordable single family homes. And Jay, you serve on the board of the Next Step Network, which is factory built manufactured housing. I feel like these creative solutions to build affordable, like where I live in Cleveland, like couple $250,000 homes, maybe even cheaper. Like it's just desperately needed. Everybody can't live in apartments. Tell us a little bit about Next Step and what they're doing on the factory built housing side.
So Next Step is, yes, I've served on their board for a long time. Stacey Epperson is the CEO. She's an Ashoka Fellow and absolutely has, worked very hard in that manufactured housing space. They're energy efficient homes. We partner with various organizations. So far, if I'm counting right, there are 2 developments that have these energy efficient homes, and there's a smaller group. I think one is a 17 home establishment in Maryland. And it's a very different, if you look at these homes, you won't be able to tell whether they're manufactured homes or they're factory built or site built homes. Something very close to my heart, because I think even as we build these, there is a negative connotation or negative lens on a manufactured home versus a site built home. And I think one of the things Next Step is doing as we partner is just build homes that, they go through the counseling piece, they do the ownership piece. We need more lenders. That's something Stacey and I have talked about in the past, is there aren't as many lenders that do manufactured homes. So as much as you will increase the supply of some of these homes and programs, you have to have some lenders finance these homes as well.
Yeah.
But it's getting good airtime, and it's really is. I'm hoping it's a good solution. And I'm going to attach something else to it, right? We talked about tech a lot, but I think this whole native mobile solution that gives more access to somebody buying that home as well about your, just mortgage education ties that piece really well together. Because again, there's education, access to information, what's available, what's not. So we need to push more borrower type of information out.
Love it. Jay, if we were to fast forward 5 years from now, what will the mortgage process look like for a consumer, assuming the robots don't kill us all before then?
I'm waiting for the robots to be assistants. I forget the name.
I have been a little nicer to Claude lately, just in case.
I am such a big Claude fan. Be nice. I think, there's a phrase, swipe a card, get a mortgage. I don't think it's swipe a card, get a mortgage, but I think solutions like what you're saying, more borrower controlled programs in that loan manufacturing process, but it will be know your customer, provide a mortgage, where we'll start seeing this, recognition of who this customer is and recognition of who the person is. There, I do agree. And again, it's a big asset piece, but there's more adoption of KYC globally than there is in the US. I think that is one other thing that will happen. And the more you get connected with who this consumer is, what their spending habits are, what their earning habits are, and you don't have to run so many things for it, and you get your capital markets and you get, this proved performance, I think you'll get to know your customer, give a mortgage.
Awesome. Well, Jay, this was great. As predicted, the time flew by talking all things mortgage tech with Jay Arneja, SVP, mortgage partnerships and strategy at nCino. As we expected and hoped, great conversation, Jay. Really, really appreciate you sharing your insight and expertise with our listeners and viewers today.
Thank you for having me. A lot of fun. Yes, time does fly with friends.
This was fun. And most importantly, thank you to all of you that spend a part of your Thursday afternoon with us. If you're listening on pod or watching on YouTube, where most of you consume the show, we do it live on every Thursday, 3 p.m. Eastern. So get to ChrismanCommentary.com and you register once and you register for all the live versions of the show. It's a good way to put faces with names and get into the chat and participate in the discussion. So thanks again, Jay. Great seeing you. Really appreciate you coming on. And we'll see everybody next Thursday at 3 Eastern. Have a great rest of the week and weekend, everyone. Thanks, Jay.
Thank you. Bye.